Hi everybody, and welcome back to FANG Friday. In case you didn't recognize me, this is Ross Healy, Chairman of Strategic Analysis Corporation. And a couple of big things happened this week. The first one I think you saw right off the bat. About a month ago, I had a cataract operation in both eyes, and last night I went to visit my ophthalmologist, and he said, "Give me your glasses, your computer glasses, and your dark glasses." So I handed them over to them. He picked them up, and he threw them into the wastepaper basket. And I said, "Where's my prescription?" And he said, "That's it." He said, "You don't need it. However, what you ought to do is you ought to take the money that you saved from renewing your prescription and get yourself some really cool shades." So I got myself a pair of Maui Jim dark glasses. Anyway, the other big change this week was the change in the tenor of the conflict between Donald Trump and China. How profound this is going to be and how long-lasting it's going to be, we don't know. But when he's calling for American corporations to pull out of China, when the trade war is getting down and dirty and nasty, then you know that there's going to be some changes in the market as well. So let's go and take a look at what happened to the stocks this week. Well, let's start with Amazon, as I usually do. And the first chart here shows very clearly that Amazon is just struggling to try to hang on to its HB3 price. That's 16 times its book value. What I really want to do today, however, is take a look at what I would call the anatomy of a growth stock. And what is the market now trying to tell us? Let's go back 10 years with Amazon when the stock bottomed right at its bubble price. That's 3.5 times book value. And look what happened over the last 10 years. For the first while, you see that? It just threaded the needle between its HB1 and its HB2. That's 10 and 12 times its book value, hitting the ceiling all the time. And then it broke out. And then it traded between its HB2 and its HB3, hitting the ceiling and backing off. It broke out again and stayed within the range of the HB3 and the HB4. But look at always hitting the ceiling. And then the last breakout occurred into the HB4 and the HB5, again hitting the ceiling. In the setback, however, the tenor of the trading has changed. And look what's happened. Now, the stock, instead of banging on the ceiling to get up, the stock has been banging on the floor to break down, potentially. And as we have seen, that is precisely what has happened. Looking at Facebook, well, it is struggling to hang on, and we will leave it in our model for the moment, but I don't know whether it will be able to hang on while everybody else lets go. We shall see. Alphabet, we simply remain patient. The stock has had a nice bounce, and it looks, however, as if it might be heading down again, and hopefully it's going to get to our long-term target, which is the super growth price, the SG price of 3.5 times book value. NVIDIA, well, look at that, eh? It tried for another breakout at the HB1, but was turned back precisely at the HB1 price of $171.50. If we switch to the 5-year picture, we get a very interesting snapshot of this company, one which looks as if it's now rolling over and potentially heading a lot lower. You will recall in earlier webcasts I have shown you what happens when NVIDIA decides to let go, and it is really ugly. As long as the bubble price holds, that's 7.5 times 7.4, times book value, then we're all right. But if this does not hold, then we have to look to history to see what will happen. Netflix, well, we've been talking about Netflix from the moment we went on. We did not like the stock. We had been warning that lower prices were coming for the stock, that the economic dynamics are changing for this thing and for the worse. The stock continues to perform poorly. Perhaps the HB3 will hold. That is 16 times book value. However, if this is a genuine top, then once again we go to the very long charts, which I've showed you before, which shows how low the stock can get. And how low is that? We'll just take a look at the fair market value potential. Down 80%. Has that ever happened before with this stock? You bet your boots. Could it happen again? Just you wait and see, Henry Higgins. If you'd like to see visually what Netflix looks like, here is the fair market value. That is a long way down. Apple, well, as we have seen over the past 10 years, Apple continues to peak at about its fair market value, and it's there again. I would have an impossible time buying this stock. And of course, also remember that those last 2 quarters have been pretty ugly. Right now, this stock appears to be trading on a wing and a prayer. We've also added Microsoft in as a sort of an aside, and you can see here that Microsoft has had a history of the past 2 years of peaking out at its HB1 price, and that's 10 times book value. It has been struggling to get through there. It struggled here for almost 2 months, has failed to do that. My guess is that we are going to see lower prices, perhaps a retracement to its bubble. That's 7.5 times book value before it's all over. And finally, just to give you a flavor of what a buy in our SVA service looks like, I showed you CVS Health. Here's a company which had been floating along its end price, that's its book value, and had been doing that for some months, almost 5 months here, but it is now starting to lift off again. Fair market value, 124% higher than the current price. I'm not counting on it getting there. However, when we recommended it to our clients at $54.62, we did set as a target its HC price, its high conservation price. That's 1.5 times book, or about $76. We'll see how this stock trades when it gets there. Anyway, that's the week that was. I will have to say that things are looking shaky. The only stock which remains in our FANG portfolio is Facebook. Heading into the fall, which tends to be a volatile period anyway, things might become even worse now that things have kind of erupted between China and the United States. I'd like to thank the clients that have very recently joined us thanks to our FANG Friday web series. Hopefully, the picture of CVS will show you what you can expect as well should you decide to join our series. To do so, you can call us or you can join us at strategicanalysis.ca. Or frankly, I guess you could even come down to visit us in downtown Toronto at 130 Bloor Street West. For those of you who have known me over the years through BNN, I would like to just tell you that there's going to be a special 20th anniversary day, actually, of BNN on Wednesday, September the 4th. I personally am going to be on at 12 o'clock. It's not going to be for a full hour because there are so many guests coming, but I would welcome you to tune in and celebrate those 20 years with me. Anyway, this has been Ross Healy, Chairman of Strategic Analysis Corporation and Portfolio Manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next week.